Sometimes your analysis can be right, your execution can be disciplined, and you can still walk away empty-handed. And this is the part of trading most people do not want to accept. Your analysis can be spot on, you can have everything mapped out, have the ability to read price very well, and you can still walk away empty-handed. To dive deeper into this, let's look at today's price action. Looking here at the daily chart, we have this sell-side imbalance, buy-side inefficiency with the displacement from the sell-off on Friday. And with yesterday price moving higher, creating this inefficiency, I wanted to see how we would use this today, going into the New York session. Looking at the 15-minute chart, we can see the overnight session was slowly meandering higher towards the swing high formed in yesterday's AM session. At 9:30 open, price trapped sellers looking to go short at breakout here. And then entering the 950 macro, we can see price trapping buyers as well. We're looking to go long from the breakout above previous day's high. Looking deeper at the 5-minute, as price approaches the 950 macro and sweeps the buy side from yesterday, look where the bodies are closing with respect to that daily SIBI, right on the lower quadrant there. And the beautiful sell-off begins exactly at the 950 macro. Keep in mind, we have all this sell side where retail traders would form a trend line from last week. And with price being in a premium with respect to the 8:30 open, the midnight open, and the 9:30 open, I was looking to go short right near the low of that daily SIBI. Why? Because you want to look for a lower time frame entry that aligns with a higher time frame key level. So the low of the SIBI being near the regular trading hours opening range gap high, the 9:30 open, that's where I wanted to enter to go short. Now I was looking at the 5-minute chart and I wanted to see if we could close beneath the high of this candlestick, forming this inversion fair value gap. But if you look closely, the high of this candle forms at 730.75, and the close of this candlestick with the displacement lower falls at 731.25. So it was still within that inefficiency, and I didn't feel comfortable going short just yet with the candle not closing beneath the high of this candlestick. So seeing that 5-minute closure, I dropped to the 2-minute time frame to look for a potential opportunity to go short. And we have this beautiful SIBI overlaying the 9:30 opening price and the low of that daily SIBI. And you can see how the bodies, even on the 2-minute, are respecting the lower quadrant there. So I had my limit order placed right here, one tick below this candlestick's high, forming the SIBI. And I wanted to see if price could reach up into that and offer me a fill. And as you can see, there was no fill offered, no candlestick printed to that level that I was looking for. And as you may already know, price had a massive sell-off below previous week's low, and this pool of sell-side liquidity seeking support at a 3-day SIBI. And there's also a new week opening gap here as well, which I don't have annotated here, but you can check that out. But anyways, when you demand perfection from price, you're looking for a cleaner entry, a better reward potential, more defined invalidation, and higher confidence in your execution. But it also creates the cost of potentially missing moves, price not always rebalancing and giving you a fill, and the best trades will sometimes leave without you, as you can see in this case. Your order can be one candle, a few points, or even one tick away from getting filled. And the key idea is precision can give you better trades, but it does not guarantee participation. And for a lot of people, missing something like this can be harder psychologically than even being stopped out. Again, this goes back to the lesson from the previous video. You have to identify your personality and execute in alignment with it. I know myself, I want to participate at the best possible scenarios. And in this case, for me, it was this inefficiency here. Did I miss the move? Absolutely I did. Is it annoying? Of course it is. However, you have to remind yourself what the cost of precision is. You're going to miss moves sometimes, and they may be large, expansive moves, like today. And it's very easy to become emotional and tell yourself, I should have chased price, placed a market order, looked for another entry at a deeper discount. But that reaction can be dangerous because now you're not refining your model, you're reacting to regret. After a no-fill move, there are only two mature responses that you can have, and it depends on your personality. If you require precision, and if you demand price to give you the perfect fill for you, and price doesn't do so, then there's no trade. And that's what happened with me today. I wanted to enter at a deep premium, above 9:30 open, above 8:30 open, above midnight open, above the buy side liquidity, and in alignment with the daily inefficiency low. And once price left that level and didn't give me a fill, I was happy to be on the sidelines and miss out on all of this because I know how I am. And even if I caught this move, I wouldn't be able to sleep at night knowing that I chased price and I behaved in a manner that contradicts my personality. A second option is to look for an entry, still in a premium, but not as perfect as your initial expectation. So in this case, we have this inversion fair value gap here, and price closes beneath here, and then offers a fill at this candlestick's high, this candlestick's high, and it overlaps a part of that daily inefficiency low and the 9:30 open. It's still above 8:30 open. It's still above midnight open. So this certainly would have been a great place to look for a secondary entry. And you might be wondering, why did I not enter here? Well, at this point, I was still open to the idea of price returning to this level. I anticipated weakness in price action and a run towards this London low and this swing low here, just above the opening range gap low. However, price had no intention to return back to this level, which indicates what? Weakness. The fact that it couldn't even reach above the consequent encroachment, just eyeballing of this inversion fair value gap. And this is the 2-minute time frame. You could have went to a 1 minute, bear shorter block, inversion fair value gap, fair value gap. You have a high, low, higher high, breaker, lots of opportunities. So this is your second option as you look for a secondary entry, which isn't as ideal as the first one, but it's still in a deep premium in this case. It's still aligned with higher time frame key levels. You have the 8:30 open. And again, you can use the quadrants of the regular trading hours opening range gap. So drawing the fib from 9:30 opening price to previous day settlement and using a gradient level in alignment with the lower time frame PD array. But again, I anticipated price to just bump this inefficiency and give me a fill. So whenever you miss a move, ask yourself 4 questions. Did I miss it because I followed my rules? Did I miss it because my model was too precise? Did price offer a valid secondary entry? Am I reviewing from data or from regret? If you missed it because you followed your rules, that may be acceptable. In this case, today's missed move is acceptable to me. Now, if this is happening too frequently for you, it just may mean that your entry model is asking for more than price is willing to offer on a consistent basis. And perhaps you're being too restrictive and you simply might need a bit of refinement. In this case, if you're expecting price to offer you a fill here when price is already closed below the daily inefficiency, the 9:30 open, seeing the strong displacement right through it, demanding a return all the way up here would be too restrictive because price has already done its business up here. Seeing the bodies close at the lower quadrant, displacement, immediate rebalance to this candlestick's wick. This is all indicating weakness. And if it were to return back up here, it's not even worth participating. The market does not reward you for being right. It rewards you for being positioned with risk managed. But you cannot be positioned in every move without lowering your standards. That is the trade-off. If you want perfect entries, you must accept missed trades. If you want more participation, you must accept less precision. Neither is wrong, but you have to know the cost of the style that you choose. So today, I missed the move, I read the direction, I had the right idea, and I still observed everything I wanted to see from the sidelines. If I could go back in time, there's nothing I would change about today. I would rather miss the move following my model, demanding precision, than catch the move by breaking it. Because one missed trade does not damage you. What damages you is letting one missed trade change who you become on the next setup. Precision has a cost. Make sure you're actually willing to pay it. Thank you guys for watching, and I'll see you next time.